What's up YouTube? In this video, we're going to compare the differences between cryptocurrency investing and real estate investing. So if you're just starting out with your investing career and you're not sure which path you want to pursue, definitely watch this video all the way to the end to see the pros and cons of each investing strategy. And if this is your first time watching my videos, welcome. My name is Sean and I'm a real estate investor based in the Bay Area. And on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and help you guys become a real estate investing boss. So over the past few months, I've been dabbling into cryptocurrency and it's been a lot of fun. It's kind of crazy because I've known about cryptocurrencies since 2011 when my friends were telling me about Bitcoin when it was just peaking $1,000. And at the time I was thinking, dude, Bitcoin seems like a scam and it's not real money. No one's gonna really buy it. It's too complicated and you can potentially get hacked and lose everything. So I never put my money into it. And now, 10 years later, it is worth 30 times more than what I could have bought it back then. So back then, I thought I was too smart for it, and now I missed out on this giant opportunity. And even while the Bitcoin price increased significantly in 2017, I also did not hop on that train back then. And of course now, Bitcoin prices have doubled since their peaks of 2017. So finally in 2021, I decided I have some extra cash. The space seems pretty interesting. It's more sophisticated now. We have big companies like Tesla who are buying into it. So it seems more legitimized. Okay, let's try it out. And it also doesn't hurt that one of my friends works at Coinbase and she's doing really well with the business. So I trust them and I figured it's time to dabble a little bit and put some money in. So again, over the past few months, I've been researching, I've been reading books, I've been watching other YouTubers talk about cryptocurrencies, and I'm just super excited about it. But of course, over the past few months, as I've been dabbling into it, I've found the pros and cons of each of them, and now I can compare them with real estate investing, which I've been doing personally for the past 5 years. So without further ado, let's go into the pros and cons of cryptocurrency and juxtaposing that with the pros and cons of real estate investing to see which one is a better investment and ultimately what you guys should be doing as new investors. So the first point for cryptocurrency. Cryptocurrencies are easier, yet a little bit more complicated than real estate investing. Now, how is that? The beauty of cryptocurrency and ultimately with like stock trading and stuff like that is you don't really need a team to do this. You can do this all by yourself in a computer, just buying cryptocurrencies, selling them, trading them, whatever. Whereas for real estate, you really do need to build a network and build a team if you ultimately want to be successful with real estate investing. However, it's a little bit more complicated than real estate investing because it's very technological. It's very new. There's a lot of pitfalls and traps that you could fall into. So if you're not very tech savvy, you should definitely do a lot of research before putting any of your money into it, because there's a lot of ways that you could potentially lose your funds. And for example, if you want to buy a cryptocurrency here and then trade it on another platform here, you have to transfer those funds from one exchange to another exchange, which involves taking an address and copying and pasting it to another address. But you have to make sure that the numbers match exactly, because if you're off by even one character, those funds are gone forever. And there's no support system. You can't just ask them to send the money back. It's gone. Unlike with bank funds, at least there's some kind of exchange going on. There's someone that you can talk to over the phone who could help you with this. And of course, like with real estate investing, you're dealing with dollars, right? So you're sending dollars from one account to dollars on another account. It's pretty simple. Whereas with cryptocurrencies, every single cryptocurrency has their own different wallet address. So you can't send Bitcoin to an Ethereum wallet. Otherwise, that Bitcoin's gone forever. So definitely do some research before going into it, because there are a lot of ways that you could potentially lose your money. And another thing that makes cryptocurrencies a little bit more confusing is that there are so many different exchanges and you can't buy every token on every exchange. So right now, one of the most popular exchanges is Coinbase. Coinbase is very safe, very structured, but the fees are pretty high. You're gonna be paying around $7 or so for every $1 in transactions. It really depends on the coin you're buying as well as how much you're buying. But if you buy on another exchange like Binance, then maybe that same transaction would only cost you $2.50. So if you're more experienced, then you should definitely go with another exchange like Binance. But again, that one is just more complicated than Coinbase. Coinbase is very user-friendly, very easy to use, but again, their fees are high. But let's say you're getting a little bit more creative and you want to buy some altcoins or some of those smaller ones like Dogecoin where they've seen like 30x growth over 1 month period. A lot of these altcoins aren't on established exchanges like Coinbase or Gemini. So then you have to go through alternate exchanges like Binance, like Kraken, like KuCoin. There's even some super speculative coins like SafeMoon where you have to do some weird exchanges on PancakeSwap and get a trust wallet. Again, it is pretty confusing. It took me maybe 2 or 3 hours to figure everything out. Whereas for real estate investing, it's a lot simpler where you just get in, make an offer, go through the escrow process, wire funds, and you're done. Because there's so many different exchanges and different wallets, and every wallet and every exchange have different rewards for staking, it can be pretty complicated, and that's why you need to do your research to find out what you need. Again, right now, I have so many exchanges, again, Kraken, KuCoin, Coinbase, BlockFi, Trust Wallet. It's a lot. So if you want to get in the cryptocurrency space, you definitely need to do your research and find out what system is best for you. Another thing about cryptocurrencies is because it is this decentralized platform, there's really no one to hold your hand. So if you lose your password on your own core wallet storage, then it's gone forever. There are stories of people who have had thousands of Bitcoins on a hard drive and they lost their private key. Those funds are basically gone forever. No one can access those funds, and it's really sad for that person who has potentially billions of dollars that they can't access because they lost their private key. In fact, the Winklevoss twins, who are famous for getting screwed over by Mark Zuckerberg on Facebook, and also the founders of the Gemini platform, have their own private key written down, split in half, and put into 2 separate bank vaults. And that way it's super secure, and they have a way to recover their private key in case they lose their login information. Cryptocurrencies are also extremely volatile. And some people say, if you can't handle the 50% drops, then you don't deserve the 100 times gains. And that's kind of true. With cryptocurrencies, we have seen 10x, 30x, 70x growth in a 1-year period, but we've also seen 40, 50, 60% drops in a single day. With real estate investing, you usually do not see that kind of a drop in such a short time frame. If you're in it for the long-term buy and hold, then you should be fine because over time, hopefully everything goes up. But if you're day trading, and especially if you're buying on margin, it is very risky because you could be doing really well with the coin, and for no other real reason other than Elon Musk sending some bad tweets, your crypto portfolio can drop by over half in a single night. So you have to be willing to stomach that kind of up and down in the crypto market. So I would say it's definitely not good for someone who's looking to cash in on it or retire with those funds. It should be just for play money or something that you plan on holding for a long period of time. But another benefit to crypto investing versus real estate investing is you actually don't need a lot of funds to get started. Most accounts have a minimum of like $100. You just get in there, start trading. And because cryptocurrencies are so fluid, you can actually buy in really small fragments of a cryptocurrency. So even though one Bitcoin costs $30,000 or $50,000, you don't need to buy one whole Bitcoin every time you trade. You can buy in super small fractions of a Bitcoin up to whatever dollar amount you want. So if your budget is only $100, so that's fine. You can be buying $100 worth of Bitcoin, which is like 0.000001. Whereas for real estate, you pretty much have to buy one chunk, or if you're buying through a syndication, then you're still putting in like 5,000 or 50,000 into the deal. If you're buying your own real estate investments, you're likely going to need $10,000 to $20,000 just to get started. If you're buying here in the Bay Area, your earnest money deposit is going to be at least $45,000, which is a lot larger than a $100 start for cryptocurrencies. So with all this good stuff about cryptocurrencies, why would you ever want to buy in real estate? Well, real estate has been a solid asset class and has stood the test of time. One of the key benefits of buying real estate is that you get easy access to leverage. Most single-family properties are bought with 80% leverage, which means that you only need 20% down to buy a whole property. So for a property that's cost $100,000, you only need $20,000, and then you get a loan for the other $80,000. But unlike buying crypto with a margin account, if the value of the property dips below your equity position, then you actually don't need to sell the property as long as you continue making the payments. So as an example of that, there are some margin accounts for cryptocurrencies that are 100x, which means that if the cryptocurrency goes up by 1%, you've effectively doubled your money because you only put in 1% into the deal. But if the cryptocurrency just goes down by 1%, then your position is completely wiped out and they're gonna force you to sell at that low point, even if it recovers after 1 minute. Once your position in a margin account goes down below your equity position, they're gonna force you to sell at that low point. Now that's incredibly risky, and it's incredibly sad because what if you knew that after 1 or 2 days, it'll rebound? The banks won't care. They're gonna force you to sell and you're gonna lose everything you have. Whereas again, for real estate, you have this fixed mortgage in place, and as long as you can make the payments, you're gonna be totally fine. And another beautiful thing about the mortgages is that they're a long-term fixed debt, usually 30 years with a fixed interest rate, so you know exactly what your payments are gonna be every single month. And as you hold on to the real estate, your rents are supposedly gonna be going up, and your appreciation is gonna be going up, and you're gonna be paying off your mortgage. So by holding on to the property over a long period of time, your cash flow is gonna be increasing. So you're gonna be getting more and more money into your bank account every single month. Real estate investing also offers you some incredible tax benefits. You can deduct many of the expenses related to the business. So for example, if I own property in Las Vegas, then I get to fly to Las Vegas as a business trip when I look at properties. And of course, while I'm there, I can go to meetings at the casinos. There's also something called depreciation. So even though your properties tend to appreciate over time and your property is worth more money, the government says that your building is going to be worthless over 27.5 years. So you get to deduct the value of the building over 27.5 years. And so this creates all these paper losses. So even though you're making a profit every year from your rents, sometimes you don't have to pay taxes because the depreciation is so high. And if your depreciation is high enough, it can even spill over and help you wipe out the profits from your other properties too. So that's why some of the real estate investors who own these big properties don't pay taxes. just because of depreciation. And when you sell the property, you can take advantage of the 1031 exchange, which means that when you sell the property, you can roll over the taxes that you were supposed to pay for the gains of that first deal into your next deal. So if you bought a property for $100,000 and then you sold it for $150,000, instead of paying the taxes on that $50,000 gain, you can roll the whole thing into the purchase of your next deal. Now this is amazing, and unfortunately this doesn't exist for cryptocurrencies or stocks at the moment. If you did the same thing where you bought cryptos for $100,000 and you sold for $150K, you can't just buy your next cryptocurrency for the whole $150,000 you made. Instead, you have to pay taxes on that $50,000, which could be 15 or 20% depending on your tax bracket. Your real estate investments also get a step up in basis when you pass away, which basically reduces the amount of capital gains that your heirs need to pay if they sell a property in the future. And of course, with real estate investing, you get stable, passive cash flow that's extremely reliable. Whereas with cryptocurrencies, you don't really get that. Real estate investing offers you the ability to replicate your success. If you have a good system going where you can find good off-market deals, buy them under value, rehab them, and then rent them out for a lot of money, you can do this over and over again in your market. Whereas for cryptocurrencies, once the boom is done, it's really hard to sell that asset and find the next thing. If you keep doing that, you have to keep chasing gains and you have to keep making these risky bets. If you do really well with one cryptocurrency, it's really hard to sell it and then find the next big thing to hope for it to boom again. Basically, it's really hard to have replicable success with cryptocurrencies, whereas for real estate investing, it's a business. You can do it over and over and over again. So which is better? Cryptocurrencies or real estate? Well, I'll say cryptocurrency is better if you're newer to investing, you don't have a lot of funds, you don't mind the crazy up and down swings, and you don't mind spending a couple hours to understand the different exchanges and how they work. You can realistically start buying cryptocurrencies with as little as $100, whereas for real estate, you probably need to save up between $10,000 and $20,000 to even get started. Real estate, on the other hand, is better if you like steady and consistent growth, and you like the passive cash flow component to it. Real estate investing is generally safer, and they have some amazing tax benefits to them. Personally, I do both, but I would say most of my investments are in real estate. I'm in a phase in my life where I want to build up my passive streams of income to support my lifestyle. And I'm also the kind of guy that buys an asset and doesn't really sell unless I really have to. For example, the only reason why I would sell cryptocurrencies or stocks is if I needed it to buy another real estate deal. So even if I had 100 Bitcoin and I had $3 or $5 million in the bank, honestly, I wouldn't spend it. So it wouldn't really do much for me. Whereas with real estate investing, I'm getting thousands of dollars a month into my account that helps me pay off my mortgage, live the life I want, and make it so that I don't have to worry if I lose my job or anything like that. And then over time, these properties appreciate. So in fact, some of the properties that I bought back in 2017 have already doubled in price. And of course, if the cryptocurrencies that I currently own boom by 10 or 20 times, then it might be worth more than my real estate portfolio. But ultimately, I'm gonna be saving and investing in both. Maybe a couple hundred here and there in cryptocurrencies. I'll probably be doing the dollar cost averaging strategy where every single month I just put a couple $100s. But then ultimately, I'm saving a huge pot of money to buy more rental properties as well. With cryptocurrencies, I'm only putting in what I really don't mind losing. Seriously, it's kind of like gambling where when you go to the table and you have $500, you should be okay with losing that $500. If this is your last $500, I would recommend not investing in it at all. And I stay away from margin accounts, and I definitely don't do any day trading. Well, I hope you guys all enjoyed this video of cryptocurrencies versus real estate. Let me know down in the comment section below what you think is the better investment. If you guys have enjoyed this video, do me a quick favor and smash the like button to let YouTube know that you like this video, and subscribe to the channel to see more videos just like this one. Thanks for watching, guys, and I'll see you next time. Take care.